All right, so we have the 1 minute chart. I went right into the 1 minute chart because we're starting with the bullish bias. And at 9:30, we see the market does, in fact, take out a short-term high. It declines. I'm not interested in going short. It does not give me a pattern anyway. Notice that there's no fair value gap revisited. The market creates this relative equal low, starts to rally, trades up into the afternoon in here. I want to see it create a buying opportunity. Now, the logic behind all this is we're in a day before Fed chair speaks. So there's going to be very low volatility as a result of that. So it's going to be a small range day. Doesn't mean you can't trade it, obviously, but it takes a little bit more experience. Now, I'm not saying that you should trade ahead of Fed Chair Powell speaking or any future Fed chairman, because it's going to be a very quiet day, usually like this. Okay, and it's important to know when the volatility is likely to occur and when also the volatility is likely to shrink up and get kind of like lethargic. If you look at the S&P at the top, you can see the drop down, relative equal lows, and then we have the same similar pattern here, but look what NASDAQ was doing. See that? Lower low when S&P was saying, I don't want to go that low. So it was resisting going lower. Then we retraced higher, just like this NASDAQ did, but then NASDAQ made a lower low than that of 10 o'clock in the morning. While at the same time, the S&P said, no, once again, I'm not going lower than the low I made at 10 o'clock. So we had a divergence here and here. No indicators, folks. I'm using intermarket relationships, and this is what I dub SMT, Smart Money Technique or Smart Money Tool. Now, the importance of that is I already had a bias that's bullish. There was no short trades that were lined up with this model today. There was no interest in wanting to be short. I want to focus on being long. So we're in the 1 minute chart here, and I want you to take a look at what we have framework wise. Obviously, you probably already seen the short video compressed today, but looking at price action like this, yes, you can see there is a rally up. It breaks the short-term low, a fair value gap. It trades up into it and breaks down. Big deal. This doesn't fit the criteria because the displacement leg here would require us to see a fair value gap above 50% of the high and the low, the displacement leg, and we don't have that. So nothing here fits the model for a short, but watch what happens. The market creates a run on sell stops here, and then rallies. Retraces back down into a fair value gap. I seen this happening, but I was trying to get the recording software that I use. And by the way, let me just throw this in here too, because I see people asking. My website address as a watermark, TradingView doesn't do that. Okay, I use my Camtasia recording software that helps me do these videos. It's just an application you can overlay like a text call out, they call it, and that's what it is. So it's really, when I'm doing the recording talking, there is nothing here. It's a blank chart, and then at the end of the recording when I'm editing it, I'll just add in my website address. And so anyway, with that said, we've seen the market trade back down in, and I was trying to get the Camtasia Studio to open up, and sometimes it doesn't open up and give me what I need, so I have to close it down entirely and then restart it. And the whole time this candle was doing its business, and I wanted to see it return into this fair value gap once more.
Visit Carvana, enter your license plate or VIN, answer a few questions, and our powerful technology will give you a...
And I got in on this candle here, and we'll look at the relationship between the NASDAQ, which was a little bit sloppier in here, versus the S&P, a little bit more structured here. So the fair value gap in here, this candle in here, it wicks down into it. And I want to get close to this fair value gap without it running too far away. So I kind of want to touch a little bit tonight with close proximity entries. That means you might not get so precise with your entries. You might fumble with your order entry, or something might happen like it happened with me. I I wanted to record me entering, not just simply say, here's a trade I took. So I wanted to show, obviously, me getting in, putting the stop, managing the position, and adding the second position in here. What do you do in that situation if you miss the ideal entry? Well, as long as you're getting in there really close, or like I'm suggesting here, a close proximity entry, I don't think there's anything wrong with it. So if we are looking for entry patterns, the idea is we want to get into where our model is suggesting it. So we're seeing the market trade lower, lower, lower. It's failing to make a lower low like NASDAQ. And we have this low that's probably not going to be taken out because we're bullish. The market rallies up. We have a short-term shift in market structure. Then it trades back down into the fair value gap. Look how many opportunities it gave to go long. 1, 2, 3, 4, 5, 6, 7, 8. 8 candles. It gave an opportunity to get in this area here, either inside the fair value gap or in close proximity to it. Now, when the market starts to rally, I have one more indication that the market structure has shifted again, bullish, with these highs taken out here. And then we had a small little fair value gap there, and then you watch me add more. A limit order came in, filled it, only had 1 3/4 handles, okay? 7 ticks if you want to think of it like that. I had 7 ticks of heat against me on this little candle here before I started running in my favor. I took the full pull off here, and I did not get the highest high. I was a little disappointed in that regard. But the candle obviously hit it there, and we'll go over to TradingView and look at the business. All right, we're over here on TradingView. This is live. You can see time of this recording. This is where I'm sitting down at the computer. And